Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. So much is going on in the economic landscape, and one of the things that we've been paying attention to and not talking that much about is the price of oil. Have you noticed? Well, what does that mean to the world and to real estate investors? That's what we'll talk about today on the Real Estate Guys radio program.
When the world changes, investing strategy changes too. The coronavirus is disrupting economies, financial systems, and daily life like nothing in modern history. Sheltering in place might protect you from the virus, but a wait-and-see approach to investing now is like pulling the sheets over your head while the house burns down. It's not the time to be complacent. So we're calling our huge network of thought leaders, seasoned investors, and technical experts to find out what they're seeing, thinking, and doing to mitigate risk and capture opportunity, and we're recording all of it. We're calling it our Coronavirus Crisis Investing Webinar, and it's totally free. All you need to do is register. Remember, mainstream media doesn't talk to real estate investors. They don't understand you because Wall Street pays them not to. That's why the real estate guys are here. To register for the Crisis Investing Webinar, simply send an email to crisis@realestateguysradio.com. That's crisis@realestateguysradio.com. Real world wisdom is the best vaccine for a healthy financial future. Send your email to crisis@realestateguysradio.com.
Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, it's our co-host and a financial strategist, Russell Gray.
Hey, Robert.
You know, I know that you pay attention to oil more than most people, and it's not because, you have lots of it in your backyard or you drive fancy cars. It's one of the many things that we look at that give us kind of a thermometer reading, the dashboard of what the economy looks like. And we certainly pay attention to real estate markets, what's happening there. We've been covering a lot, obviously, about COVID-19 and its effects. But oh my gosh, I filled up my tank for $1.19 the other day.
Yeah, so it's kind of interesting. There's a lot of talk about whether there's going to be inflation or deflation. We just did a newsletter on that exact topic. A lot of times people get confused because prices are not necessarily reflective of inflation or deflation because prices change for various reasons. Inflation or deflation, which is the amount of currency or purchasing power in the system relative to the amount of goods and services, that's kind of inflation, deflation. When you add leverage to it, when you bring money in from the future into the present, that has the potential to drive prices up and establish a price point. And then when you raise interest rates or take leverage out of the system by tightening credit, those very same prices can drop. We see that all the time in real estate. It's why real estate investors pay attention to interest rates and lending guidelines and credit markets and so on. The other part of it is supply and demand. And obviously what's happened in oil recently is directly attributable to supply and demand. Now, I think most people, when they consider oil, realizing that we have a financial system, as Chris Martenson points out all the time, that requires exponential growth, it's going to require exponential consumption of oil, and that puts a lot of pressure on oil production. So the natural thing is to think, there's going to be more increase in demand, and therefore prices are going to go up. Of course, oil is denominated worldwide primarily in dollars, and so oil can also be used as a proxy not just for economic activity, but also for the dollar. So those are the reasons I pay attention to it. And of course, oil is built in, as energy is, to the cost of pretty much everything: food, transportation, many of the things that affect your tenants' cost of living and their ability to pay rent. So there's lots and lots of reasons why, as a real estate financial strategist, I pay attention to oil. But right now, with the entire global economy on shutdown, the global demand for oil has completely stopped. And unfortunately, you just can't shut off the production of oil the way you would flick a light switch. And so there's a big glut, so much so that the price actually fell all the way below zero. Now, I'm not that smart, but something inside me says, somewhere inside of free oil, there's got to be an opportunity. I just don't know what it is.
Yeah, some of that is because a lot of oil transacts in terms of futures, and people are expecting never to actually take delivery of the oil. They trade in those contracts, and that's certainly above our pay grade. But what happened is, with oil prices so low and the glut, it's not just that prices are low, it's that it's not being used as much. I mean, look at the emissions going down, look at the incredible decrease in traffic and all kinds of modes of transportation. So they aren't using it. So now all of a sudden, folks who play in those contracts are having to take delivery. Well, where do you put 110,000 barrels of oil? Well, the places you might think of are all full.
Yeah.
They're all busy. So literally for 5 minutes, they were paying you to take the oil off their hands.
Yeah. Well, I mean, if you think back to Detroit, again, as a real estate investor, at one point, Detroit was the richest city in the world. Everybody wanted to live there. Real estate was very expensive. Jobs paid really well. It was the crown jewel of metropolitan statistical areas, not just for the United States of America, but for the entire world. Well, then the automotive industry kind of fell on tough times, and Michigan decided to create an environment that wasn't friendly to business, but was actually hostile to it. And the combination of those two things happening really ruined the automotive industry. And it put Detroit into a place where it went from a population of 2 million to a population of less than 800,000. That meant there was a lot of excess supply of real estate. And just the maintenance costs, the insurance costs, and the property taxes and so on were so much, they were literally giving the houses away, and people still wouldn't take them. And ultimately, the city of Detroit had to bulldoze properties to remove the excess inventory in order to get rid of them. So the idea is the principles of investing, whether you're talking about oil, real estate, bonds, gold, whatever it is, they're really all the same. And I've learned, as I've learned more and watched the oil industry, that a lot of the things that I've learned in real estate investing apply directly. You just have to kind of think about it, just dig past what the people in the business are saying, because they all speak their lingo and they kind of look at things through their paradigms. You kind of look through it to the patterns and principles of the things that they're saying, and all of a sudden you relate it to what you already understand. You're like, okay, I get that. That makes sense. And so that's what's happening. People have so much oil, it costs money to get rid of it, and you actually get paid to take it because you're alleviating the person who has it of the expense of having to deal with it.
So I'm glad you brought up paradigms, because that's a big part of today. Is you approach the world based on your set of beliefs and your filters, if you will, and you might think, well, hey, low oil, that's great. Well, it's great for your tenants. If your tenants can afford to fill up their tanks, that means they've got lots of extra money to pay their rent. Now, they should pay their rent first and, spend the rest on things like gas, but that's not the real world. So it's also meaning that transportation of goods and services has become less expensive. When we're flying again, it could be that we'll see price wars because oil's available cheaper. Again, a lot of airlines work on those long-term contracts, but so there's some good. And then also there's some bad about it. And it's easy to get caught up in it, but you have to understand that there's always two sides to every single coin. And part of it is, are you an optimist or a pessimist? If you're a pessimist, you'll find all the reasons to figure out that this is a terrible time to be in the oil business and there's no money to be made. If you're an optimist, you'll discover opportunity. It's like the family with the two kids. They're twin boys, and one's an optimist and one's a pessimist. And one year, the parents decide that they're going to fix this. So at the holidays, they make sure all of the presents go to the pessimist. There's not a single present for the optimist when they wake up on the morning of Christmas. So the pessimist starts opening the gifts and complaining and doesn't like the color and doesn't like the size, and this is awful. Meanwhile, the optimist is just sitting there with a big smile. Finally, when all the presents are open, the optimist says, well, is there anything for me? And the dad says, actually, there is. Out in the garage. They go out to the garage, they open up the door, and there's a giant pile of manure. And they're trying to teach the kid a lesson, right? You can't look at the world with rose-colored glasses. So the kid sees the giant pile of manure and runs and jumps in it and starts digging and digging. And the mom says, what are you doing? He goes, well, with this much manure, there has to be a pony in here somewhere. That's the optimistic side. So other part of that is it's not right or wrong. So as you listen today, I think we're going to break some paradigms. And I think you're going to learn something that you probably weren't expecting to when you tuned in today. And you've now pretty much exhausted our entire understanding of oil and gas. But our guest is a guy that's been in the business since the early 70s. He knows a ton about this business. When we come back, we'll say hello to our good friend and oil man, Bob Burr, today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just to start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brian London, Dr. Chris Martinson, and many more. Email future@realestateguysradio.com today.
Hi, this is Mark Skousen, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com. Glad you're here today. We're taking a little diversion, talking about some asset classes that are related to real estate, but not exactly real estate. And this is one that's been on our mind recently for the obvious reasons. That's oil and gas. Let's say hello to our good friend from Panther Exploration, Mr. Bob Burr. How are you, Bob?
I'm doing great. How you doing, Robert?
I'm doing well. It's always good to hear your voice, my friend. And these are interesting times. You know, Russ and I were talking before we brought you on here about just how extraordinary it is to have gas and oil at these prices.
I tell you, I've been in the business since 1973. I've seen about everything. I thought I had seen everything you can see. But when oil gets to 30 or 40 minus, this is unprecedented, and it's tough right now. It really is.
You know, it is one of those things that I know people are thrilled when they pull up to the gas station and gas is $1.50, or I filled up for $1.19 the other day. So there's that part of the economy going, this is great. But on the other hand, you have all of the logistical chain of bringing the products to market. And of course, you guys are involved in several facets of that. But it's a real shakeup, and it's a world market because everyone uses petroleum products.
Well, the real problem is the coronavirus has shut down the economy of the world. So even though gas at the station is cheaper than it's been in years, no one's really buying it to speak of. It's not like the roads are full of cars, or the factories aren't using it because they're shut down. You know, it's just, it is mind-boggling the effect that this has had on the industry. But the fact is, if they don't use it, they don't buy it. And if they're not buying it, of course, the price gets down there where it is now. There's no buyers for the oil. There's no storage. In fact, we will probably convert our saltwater disposal facilities. We have like storage areas out there. We may start buying oil and storing it. We've got a room probably for 10,000 barrels. And we're negotiating right now to pick up some good, serious money when it comes back. June, July, it'll be back. Not what it was, but it'll be back. Now the negative side, because we will have used some of the inventory. But until then, I had a gentleman call me earlier today, and he's not in the oil business. He's a friend. He's a very sharp guy. And he says, Bob, why don't they just shut all the wells in? You just can't shut all your wells in. It doesn't work like that. Every time you shut a well in, you're taking a chance on losing that well and going into spending big money to get it back, if you get it back. So there's a lot more to it than all of that.
Yeah, it's so interesting as you watch it on both sides. I mean, I remember back in the late 70s, you were already in the business. I was kind of in the business. I was a petroleum transfer agent. I worked at a gas station, and it was back when we had gas rationing, and the prices were tremendously high. And
Embargo.
Right, yeah, embargo. But it was still a problem. So I guess the question is, does this mean just, you have to figure out these alternative strategies? I love the contrarian idea of storing up on some of this if you could. We often joke, man, I wish we could, store a bunch of gasoline at this price. But there's also other opportunities. And this is an area you've actually opened my mind to, Bob, is that, in real estate, our listeners are used to buying an income property based on the income it produces. So two identical properties next to each other, same number of units, same builder, same everything, but one has higher income, that one's going to sell for more because you buy an income property based on its income. And what you've taught me is that's actually true in your business. So I'm guessing there might be some silver lining to low oil prices.
Oh, no doubt. There's an opportunity that's available today. It's unprecedented. It hadn't been there before. The next 6 months to a year, there's going to be a reshaping of the oil and gas industry. Many of these very strong independent oil companies will go under. I've heard as high as 60% that will be filing BKs and losing their deals. I mean, we've been used to living on $60 oil, $50 oil, and these independents can make good bucks. They take care of their clan. They do good. $20 oil, no, it won't work. All the shale boys, it's got that high premium basin out in Montana, Dakotas, they're in trouble. They're in serious trouble. They've got to have $40 a barrel to make it. It's not there. And they have tremendous debt services. The banks have loaned them millions and millions of dollars, and all of a sudden the banks are getting tight. Loans are coming due. All they have is to liquidate. What we're doing now is a large bond offering. We've developed a beautiful advisory board. These boys will own lots of options on our stock, be vested in the deal. Ed, H-I-R, he's a writer for Forbes, and you may want to check Forbes this morning. He came out with a beautiful, and he's on our board, top notch, just an economist, and he tells what's going down right now, and you should read it. And he's one of the guys that will be guiding our ship through this ocean of opportunity, really.
Well, I love that about you guys, that obviously you've got tons of experience. At the same time, you bring in other experience, which is huge. And that's, we always talk about having your advisory board and your team together, and that's critical. Before we talk about specifically what you guys are doing, because I think the listeners are going to be interested in hearing that, because it's contrarian and it's pretty cool. I think let's bring everyone up to speed with maybe the various ways that people do generally invest in oil and gas. So for many years, most oil and gas are syndication and kind of investments where people pool their resources and come together. There's certainly tax benefits involved, which is a big driver into oil and gas. But Bob, if you would, talk about just the various different ways, development, exploration, all those things that are ways that people have typically invested in this sector.
Well, let's talk about the individuals just buying energy stocks.
Yeah.
Now, it would seem to be right now a great time to be buying stocks. But how do you pick the ones that's going under?
Right.
So it's tough. You can really get killed in that arena. Of course, you can always invest your money in the drilling of a program, get your great write-offs, get the income from the well, or get a dry hole and lose all your money. You can go into partnerships where you're buying leases. And then when the guys start, like out in Colorado, we had several funds that were actually going out $50 million worth and buying all these leases in the play there in Wattingburg. And the investors come into that lease bank. And then when you sell it for a profit to the people that's going to drill the wells. And then you keep an override and you make money on your leased acreage. You pay X for it, sell it for X and a half, and keep a carried interest. So there's many, many different ways you can get in the saltwater disposal business, which is a great business. and it's one that makes money. They have to have a place to dispose of their salt water, as they produce a lot of these wells. They make a lot of water, and you get to put it back in the ground. It's regulated very highly by the Railroad Commission of the state of Texas, just in Texas. And you're skimming oil. There will be a part of that water that will be carrying oil, 0.5%, 2%, 3%. The better the operator, the least amount you get. That's how it works. And so you make an income stream from the oil that you sell. And then, of course, you charge them per barrel for the water. You get into buying the service companies, pulling units, workover rigs, just on and on and on. There's many different ways that I primarily over the years, I've worked on syndications or partnerships in oil and gas drilling. Now is a great time to be buying production. These boys, they have requirements on their leases that as long as they're producing, they own the lease. Now, if they can't produce and make money, they're losing money every month, and they're going to shut these wells in. So there's going to be some beautiful opportunities there when these guys file bankruptcy. And bless their hearts, we want to help them. We're not there to cut their legs off. We want to be that one source that comes to their aid, that supplies money. And I'm talking about I feel like in the next 3 years we'll raise 400 to 500 million. I put together the team that can do that. I've got a legendary investment banker on my team that I watched him raise a fella $34 million in 4 days.
Wow.
And got a great attorney that's beautiful. He was the president of Prudential Securities, and he has faith in me. And then we have 2 fellows on our team that built a company that did quite well. It's still a gamble. I don't want to mislead anyone into thinking that it's just going to jump up and fall in our face. That's not how this life works, and we all know that. There's a lot of work involved. I'm working harder right now, Robert, than I worked 20 years ago before I retired. I mean, Lord God, I'm up at 4:30 in the morning. I'm already on the phone talking to folks all over the country. My one guy that's the glue, this guy's talking to England. We got a big deal going on over there. They looks like they want to come with a ton of money. So people's recognizing that now is the time to make a tremendous entry into the business with tremendous rewards. Yes, it's a gamble. Sure it is. Everything is. We know that. I don't want to downplay any of that. And what I've done and what we've done is we selected our people. These guys, they've been knowing me for 30, 40 years. They know I pay my bills. They know I run the business right. They know I'll tell my people when Spot dies, he died. I don't try to color it green when it's red. I don't play any garbage. And that's a good structure to start with. If you have faith in your partners, when I know that my guy out there playing that position is the best that you can get, like Mr. Iyer, this guy is a writer for Forbes. He was mentored by 2 Pulitzer Prize gentlemen. I mean, he just yesterday testified before the Railroad Commission, state of Texas. They called him for his expertise in the oil and gas industry. Well, it doesn't get any better than that. I mean, Don Henrik, this fellow he was a tremendous driller. He owned many rigs down in South Texas. He was drilling wells for me 40 years ago. So we go back that far. So I don't have to, I hope that guy's a good guy. You know how it is, you get in the deal and all of a sudden you wake up and golly, that old boy wasn't what you thought he was. No, he's scheming over here. I don't worry about any of that. I can sleep at night. Now, the energy level with my folks, my boys, with me and with these, it's unreal. I mean, I'm sitting here with goosebumps on knowing what I feel like we can do. I mean, really and truly, and I regret the coronavirus. I regret all of these little ladies. I come by Starbucks and I come by some of my places I stop, and these little folks are working. I always take care of them and hug them and do what I do. And they're not there. These little babies, they need money. My God, their little life's screwed right now. And that hurts my heart. It really does. I'm that sensitive about, and we're hurting out there. Now I got to put that hat on because that's who I am in my heart and soul. I care and love people. Now I got to get over here and say, okay, now we got to deal with this. So how do we do this? Let's turn this lemon into lemonade.
Well, and I think that's exactly what you've done. When we come back, we'll talk about specifically how you've taken low oil prices and a bleak horizon in coronavirus and turned it into what could be one of the best opportunities folks have seen in this space. Also, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 14th to 17th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2019 was the biggest year in tourism Belize has ever witnessed, and this year is already on track to beat it. How does that translate to real estate investment? That's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me August 14th to 17th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market's interesting to you. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you're registered, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 14th through 17th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Bill Bonner. I'm author of Hormageddon, and I'm the publisher at Agora, where we publish more than 2.5 million readers around the world with the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks a bunch for tuning into the show today. Wherever you're sheltering, we're glad that you're here. We're talking today about oil. It's in the tank, so to speak, and what does that mean to investors? Perhaps opportunity, as we cover kind of a non-traditional asset, something outside real estate. We're going to do that for the next couple of weeks. Before we get back to our interview with Bob Berg, it's time to play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question, which will have something to do with our topic today. When you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your mailing address so that if you're the winner, we can send you an awesome prize. It's a book called Resilience: Turning Your Setback into a Comeback, a collection of awesome stories by great folks put together by our friend Kyle Wilson. That can be yours if you know today's real estate trivia question. Last week we had Brad Sumrock on the show. In fact, his Weekend to Wealth is coming up this weekend. Send an email to weekend@realestateguysradio.com to learn more. we asked this: in which U.S. state will you find the community of hot coffee? Well, hot coffee is located in Covington County, Mississippi. Back in the late 1800s, L.J. Davis built a store and hung a coffee pot over his door, advertising the best hot coffee around. His coffee was made from pure spring water and New Orleans beans, plus molasses drippings for sweetener. He never served cream with his coffee, believing it ruined the taste. But the popularity of his coffee led to the name of the community, Hot Coffee. See, you really do learn stuff when you listen to the Real Estate Guys. Hey, we're talking about oil today. Speaking of oil, here's our real estate trivia question for this week. The Beverly Hillbillies was a sitcom that aired on CBS from 1962 to 1971. In the show, the Clampett family moved from the Appalachian backwoods to posh Beverly Hills, California, after striking oil on their land. But the show was not originally to be set in Beverly Hills, rather in another real estate market. Which one? Yeah, which real estate market was going to be home to the Hillbillies? Not the Beverly Hillbillies, but something else? If you know that kind of trivia or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your mailing address. First person that gets it right gets resilience, turning your setback into a comeback. That's today's real estate trivia question. We're talking about oil and gas with our good friend Bob Burr, who's been in the business forever. And, Bob, one of the things that always strikes me about you is that you are a glass half full kind of guy. Even though you call it like you see it, and when things are tough, hey, things are tough. We've experienced that certainly in a lot of real estate markets. And now oil's down. What do you do? Well, you've come up with a pretty ingenious way to take advantage of this, but not take advantage of the folks. You mentioned before, we're going to see bankruptcies. We're going to see people lose their properties and their businesses. But you guys have come up with a plan that actually can help some of those folks. So take us through the way you've decided to make lemonade out of these lemons.
Well, your folks may have noticed in the last 2 weeks, Exxon did a $10.5 billion bond offer. Now, why would they raise $10.5 billion?
Right.
To make purchases on depressed properties. They're buying, instead of buying small fields, they're buying huge fields in Alaska, offshore. But they're getting ready for this downturn, this selling frenzy. We've sent out 5,400 contacts from our office in Texas. We've got back 3,000. I believe he said this morning, Brad, 3,000 inquiries of how we can help them.
Wow.
Okay, instead of going in and trying to steal their property or do whatever you do, if you're that kind of trader, we don't want to do that at all. We want to go in and help these people, give them the cash flow they need for a couple of years. We'll set it up on a decent interest rate, but we'll make sure that their production can pay us back in 2 years, or we won't do it. Then we'll run our traps. I say Ed, our reservoir engineer, one of the best in the business. We'll run the traps over the entire properties before we ever do a thing. And we'll know it's one we want. Now we'll check with the Railroad Commission, and we will check the operator. How serious of a man is he or a lady? What kind of operators are they? If they're great operators, they take pride in what they do, and they're as sensitive as we are about our money, then we'll keep them. We want them. We don't want to operate. We don't want to steal their properties. What we want to do is to back in after the payout for 25 or 50% of their production for supplying this critical money that without it, they're BK. And then they take a chance on losing everything. Those deals will be out there. Some guys, like I was saying earlier, if they have to shut their wells in, they could actually lose their properties.
Right.
They have production requirements in their lease. And if they haven't produced that well in X amount of time, it reverts back to the landowner. So these are all situations. It's out there. I mean, it's crazy. I believe we can employ 300 or 400 million over the next couple of years with no problem. Now, the type instrument we're using is a note or a bond. It will be paying the partners 10% on their money, starting off. Now, starting at $20 as our mean, our average on the price of oil,
$20 a barrel.
every $10 it increases. Let's say it goes from 20 to 30 in a 3-month period. Then we will pay an extra point. We're going to let our note holders enjoy the gain with us as it goes up. And it would max out at 18%. That's the most we would pay.
Yep.
They have provisions of converting their notes into equity in the company at a beautiful, beautiful, beautiful rate. They'll have warrants with this. The first, after 2 years, they can start participating in their warrants. And the first warrants will be like 25 cents a share. In the next year, 50 cents. This is a sugar deal, really and truly, Robert, for your people primarily. For the real estate guys, we have a lot of folks out there. And by God, we're going to take care of them. And we're going to build a deal where they can ride this train right on up with us. But the folks may decide just to never sell their stock. Just keep getting that dividend. And we're going to pay them. You know me, I'm the most generous guy in the world. I believe in everybody winning. It's no fun if I just win. I just don't get a thrill out of it. I like those hugs from people when you see them. That smile on their face. That means more to me than the damn money. Really, it really does. And so we are doing a 10 million now, and we're getting. We've got a lot of money in already on it, and we'll be finishing that. And then Art will come in, our big investment banker. You probably know him. We'll talk about that later. But Art's already got a machine going here. It's gonna be good. It's going to be good, and I want you guys to be a part of it. Because without you, I doubt if I'd probably be playing golf right now. You got me out of retirement.
Well, that's it. I mean, if folks haven't heard the previous times we've had you on the show, the first time you really kind of told your story of coming out of retirement and not needing necessarily to get back in the business, but recognizing the knowledge and experience, and as we're seeing, the contacts that you have really play into an opportunity like this. I remember when we saw the housing crisis and people were losing their homes. There were vulture funds who were waiting for people to fail and scraping up those assets pennies on the dollar. Then there were folks who went in proactively to the homeowner and said, hey, we can help you out of this in exchange for a longer term play. And that's really what you're doing here. You're taking the operator that might be on the brink of bankruptcy or certainly not able to, feed their family with the price oil's at today, and coming alongside, helping them out for a couple of years, and then exchange, you get a whole bunch of the upside. And to do that in a fund is pretty interesting. So a person doesn't have to have the years of experience, know the people, figure out how to find these operators. That's what you guys do. Someone can come along passively. What does that part look like? I'm assuming those are accredited investors?
Yeah, what we do a Reg D 506C, strictly for accredited, strictly for folks that get a validation that they are indeed accredited. We don't deal with anyone that can't do that.
Yep.
I found over the years that you have to be able financially to withstand some losses because you have losses. This deal here, I'm putting my heart, soul, and everything about me in this deal. I feel like this will be my last deal. I'm 74 years old, going on about 50. I did my push-ups yesterday, by the way.
Right on.
But this is just something that I have to do. I mean, there's just no way I could not do this. My boys, I got folks that depend on me, and I worship them. And I want to walk out of here and leave them with something that is so damn special. We look back on it I got days that's coming up on my deal. They walk out there, they said, that old man, he saw our shop, we took it, and here we are as a clan, and we do quite well. And then the people that's been supporting us, all the folks from the boat, and I have a lot of clients, Mr. Broyhill, a big boy down in the Carolinas, furniture man. I was talking to him yesterday. He's 94, and his son Hunt runs the business. But those people, I owe my life to. I owe my economic life to some of these people, and I've got a shot here at taking care of those folks like they've never been taken care of before. And I believe that with every ounce of my fiber. It's there, baby, and the team's there. These guys. Look, I call it 4:30 in the morning, and my glue man, Brad, and in Waco, Texas, That guy's already on the phone working England, all over the world. I mean, this guy, he works as hard as I do. And believe me, brother, I work. I show up early and stay late.
I know you do.
He's a match. So we put the team together. We'd love to have folks. We'll educate them. We'll take our time. They need to understand everything about the deal. And then if they choose to be involved with us, we'd welcome them. But if they don't, well, they got a good education.
All right, good stuff. Well, if you're interested in learning more about this, when we come back, we'll tell you how you can get a hold of Bob and his team and find out more. I just think it's always intriguing when folks look at different ways to take advantage of change. And this is a big change. The coronavirus has affected people like never before. And, you know, someone in the business as long as you've been, Bob, you've seen maybe not this, but all kinds of different things. Oil up, oil down, people going out with crazy ideas, people coming in trying to take advantage. And to me, this is a way that you can help some folks on two sides of the fence. Certainly these smaller oil producers that run into trouble, but also people are starved for return right now. There's a lot of nervousness. The stock market's been hit hard and people are looking to maybe make that up. And yet they're also a little, unsure. And so what I like about the bond offering, it is a predictable amount of income. Sure, it can go up if oil prices go up, but it doesn't have to for the model to work. And there is that upside that you talked about. There'll be folks who maybe want to get in and out in a few years, and there'll be folks that want to ride it for a long time. Before we finish, let's just talk quickly about the tax side, because I know when you are in development, there's some big tax benefits. Is it the same for a fund, or is there any tax advantage? And obviously you're not a tax professional, but I know you have your mind around this.
No, basically you do not get the tax advantage. Now, I'm sure the corporation will get some tax advantages, but a bond is bond, unearned income, passive income, this sort of thing. However, here's a diamond. As we develop these properties, we will find properties that have beautiful drilling prospects, direct offset prospects, just really good stuff. And guess who will get to drill those? We will with our partner.
Right.
For the years up, we will come with a large drilling program, probably of the best product we've ever seen, because we're in there and we're able to cherry pick what we want. If it's not a dead offset, there's a chance we won't do it because we can be very selective right now. And so we see that as a tool we'll use to help shelter this income for all the partners. You see, and it can create us a tremendous flow of prospects. That's another benefit that none of these other guys have seen, but I know what it is. I know that when I'm in my regular business, the hardest thing I have is finding a prospect that I will actually raise money on just anything.
Right.
And this should provide us with a supply of a product for health. As long as the boys want to be around doing it, it'll be there, I think.
Right on. Well, Bob, always I learn something from you every time we talk. Great stuff. Thanks for sharing this. I know this is big on your heart to do, and I think it's a great way to take what looks like terrible news in terms of oil and making it something that's going to create lasting legacy. Always good to have you on the program, my friend. There's Mr. Bob Burr. Thank you, sir.
Hey, thank you so very much, and have a great day, Robert.
All right, you stay safe, and I know it will not be long until you'll be able to get out and get hugging those folks. That's Mr. Bob Burr from Pan-X. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Do you have a self-directed IRA invested in a syndication? Guess what? It's a ticking time bomb. Why? Because IRAs get hit with UBIT taxes, even Roth IRAs. Hi, I'm Damian Lupo, and we fix this problem for you forever. It gets even better because using the EQRP, you can literally get rid of taxes from all of your gains forever and protect your nest egg. The EQRP is the best vehicle to get it done. IRAs can't do it, not even Roth IRAs. You see, UBIT happens whenever any type of IRA invests in anything with debt. Don't worry, even if your IRA is already invested in a deal, we can kill that tax. Our team at Total Control Financial is here to give you control of your retirement money and free you from that deadly IRA tax forever. Want to learn more about the EQRP? Send an email to eqrp@realestateguysradio.com. I'll email you my special report and send you a copy of the QRP book. Paying a 37% UBIT tax is stupid. First step to getting rid of that tax is to send an email to eqrp@realestateguysradio.com today.
Hi, everyone. This is Jim Rickers, the author of The New Case for Gold, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show today. Oh my gosh, talk about a whirlwind of excitement. Bob Burr is something, isn't he?
I feel like I just got done watching an episode of the Beverly Hillbillies. No, I could listen to Bob talk all day long. There's just a down-home common sense about the way he approaches things. But, I think the answer that we got, which is the answer we're looking for, is like, where's the opportunity in this crisis? And, as I was listening to him, I thought to myself, okay, again, how do you relate this back to something you understand? If I'm out there and I'm a real estate investor and all of a sudden I realize that there's an economic depression or an economic recession and people's incomes have gone down and maybe they can't make their mortgage payments, then I may send out some solicitations looking for pre-foreclosures. I may be looking for people that are having cash flow difficulties that might be willing to not just sell me their property, but maybe we could create some type of an equity share. We had people doing that after 2008, where they would find a borrower who was going to lose their home, and they converted them into a renter for a season, and then gave them an option to buy the property back later. So they got the stability of living in their same home, the opportunity to buy their home back, but the investor got a chance to make a profit for helping them bridge the gap. I'm listening to Bob, I'm thinking, okay, this is kind of like that. The difference is the oil price is like the rents. And when the income comes down, the person, the homeowner or the well owner, if you will, is like used to living at a certain standard of living. They don't have enough income coming in. And they're like, okay, I think long term, this is going to be a good well to own and oil prices will come back. But meanwhile, I'm starving. So Bob or an investor comes along and says, hey, how about this? We bridge the gap. We give you some cash so that you can subsidize your meager income from the low oil price. And then later on, when the price comes back, then we get to have a long-term percent of your income in perpetuity. I'm like, that's brilliant. That's really brilliant. That's a great way to have a win-win deal where you're not a vulture, but you're making a good profit for adding some value, and you're taking advantage of a situation that nobody created and you didn't hope for, but you can help people get through it. So rather than see someone lose the well or see the well capped, which would later on create the very problem, that we had before, which is oil was priced too high. There wasn't enough production. Now we have too much. So I think it's a great idea.
Here's what I love about this. Whether you're interested in oil or not, it's a guy that's been in an industry for nearly 50 years, sees it differently than everybody else. So he understands, having been through $100 a barrel oil, $20 a barrel oil, $60 a barrel oil, and seeing how the various players in his industry react and what happens afterwards. He put the two and two together and went, wow. And then, even though the guy's got 45 plus years experience in this exact space, he put together an advisory board of the who's who in this area because they're going big. I mean, this is a really huge opportunity. It's an opportunity to heal these problems instead of just come in and swoop down and you're the winner because someone else is the loser. So love that.
Yeah, well, it just reminds me of syndication. He's looking at Exxon. He's like, okay, Exxon's doing this big thing. They see an opportunity. They can play at a big level. right? We see big players all the time, as real estate investors, like we can't play at that level. But there's a level in between where we are and where they are that's kind of an open playing field. And you get there by syndicating. You raise some money and I can go do a bigger apartment building than I could do on my own, but I'm not competing with, the great big players in the world. So you can follow the same pattern, the same logic, the same investment strategy as a big player, but take your game up a little bit. So I love that. Again, we can learn a lot. We just got done doing a book study in Seth Godin's Purple Cow in our mentoring club. And that was really interesting because one of the things he talked about is you look at one industry and you apply what works in that industry, a pattern or a principle, and then you bring it and you attach it to an industry that it's not there for. And so here, we can look at what a guy who's experienced oil investor is doing and how he's playing the game and go, well, how can we make that work in real estate? And conversely, how can we take what works in real estate and make it work in oil? And I think the big takeaway is there's a lot of similarities in the strategies. You just have to decide which asset class you like. But there's a lot of reasons to like oil. It's still real estate.
So if you think you might be interested in the oil bond that Bob and his team are putting together, all you have to do is send an email to oilbond@realestateguysradio.com. That's oilbond@realestateguysradio.com. That'll put you in touch with PanX, Panther Exploration, Bob Burr's company that his sons and some other great guys run, and they'll be sure to get all of your questions answered. For the next few weeks, we'll be discussing some alternative assets to traditional real estate. So while oil and gas is very much a real estate-related asset class, next week we'll look at a type of real estate that's different than what you may be used to investing in, but very attractive, especially right now. Big thanks to Bob Burr for sharing his immense knowledge and his great personality. And until next week, stay safe and go out or stay at home and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.